many ways from making
right, but
the
why
decision.
would they?
Hey everyone, here's a quick update going on Tesla regarding the board member shareholder vote that was circulated this morning. So let's listen in a little bit.
Paying him for work he already did. It's not payment. It's not compensation for his future earnings, and that's legally very possibly a difference.
Okay, let me just go back for a second, because I have to say I understand the argument you're making, but I also say to myself, if I made a deal with a company, if a company came to me and said, look, Andrew, I'm going to pay you X amount of money, and you're going to work for the next 5 years based on this assumption. And then at the end of the 5 years, a court decided that they didn't want me to get this kind of money. I would say that feels unfair. I was doing this on the assumption that this, and by the way, in Elon's case, he had other opportunities, which is to say he could have refocused his efforts on SpaceX. I mean, he's a unique individual in that he's got a lot of, there actually are other things he could do. I know you'd say he's incentivized, given his past ownership of Tesla, to stay in it. That's a separate issue. But my question is from a just straight fairness perspective. Right. If you work based on a certain assumption and you don't get that money, do you not believe the company should try to figure out some way to compensate you for what your understanding of that deal was?
Can I challenge your hypothetical? Because you framed it as the company came to you and offered you this money and then it was taken away. But what she found was that he went to Tesla and controlled his own package in violation of his fiduciary obligations, which means it's not a question of justice that he relied on this and then it was taken away. This is a question of him being charged with functionally manipulating the board.
But at this point, if in fact this whole vote is put to a vote with everything that's known again, you can't manipulate anybody.
But you can't be paid for past work done. That's the issue.
That's a set,
that would be waste.
I mean,
it becomes a whole other set of issues at this point.
That's exactly, that paying somebody for work they've done and not providing new value is very possibly simply not something that even a majority of the shareholders can approve of, because if you're going to waste corporate assets, it needs all of the shareholders.
Okay, so Ann, let's assume you are right. What happens next?
What happens next, actually, I mean, it's very possible we see shareholder lawsuits right away, but what I actually expect is that shareholders will ask for internal Tesla documents, what are known as 220 documents. They have a right of inspection for internal documents. Now, this proxy for the move to Texas, I don't know if we've talked about that. The move to Texas,
we haven't hit Texas yet, right?
There's a lot in the proxy, but I'm not sure there's as much detail on the pay package. So they're going to. So I think what the shareholders are going to likely ask for is internal documents, and it's a not insignificant chance that the SEC will ask for clarification part of the proxy. If it's a very long document, I haven't read it all, so I don't know what exactly they'd ask for, but those would be the immediate moves that I would expect. Internal documents asked for by shareholders and clarification requests from the SEC.
And if, in fact, the vote were to take place and then the vote would happen, then you'd say there would be a second shareholder lawsuit probably brought by the plaintiffs of the first case, no?
I don't know if it would be by the plaintiffs in the first case. I'm not sure exactly whether there might be concerns about whether they're having an odd set of conflicting incentives. But there are plenty of other shareholders and plaintiffs' lawyers who I'm sure would be happy to take it.
Okay, it's a longer debate. I hope we get an opportunity to have it again, and once we both get an opportunity to totally dive into all of the documents. Ann, thank you for joining us this morning. It's fascinating.
Thank you for having me.
Wow, all right. So this is going to be really interesting. Basically, you saw a little bit of a sample of this debate of what's going on after, and we saw some of this debate before. We just heard this on CNBC Sizzles as well. Elon Musk obviously had a 2018 pay package that was essentially invalidated as a result of a judge finding the board was too connected to Elon Musk, and basically the board didn't have a chance to accurately represent shareholders, and therefore shareholders were not properly provided with information, that there was a lack of negotiation around this, or too much influence by Elon and not enough from the board. And so even though shareholders approved the 2018 shareholder package, a judge found that shareholders did so under the pretense of false information, and therefore the 2018 pay package was invalidated. Now the three things they're looking to do are to re-elect Kimball Musk and James Murdoch in this pre-shareholder meeting filing that they're circulating. Approve moving moving the state of incorporation for Tesla to Texas. So approve moving state of, let me write that down really quick, incorporation from Delaware to Texas, and approve the 2018 pay package. Now, the interesting thing that I thought is that, hey, okay, well, if you initially just asked for the vote when I got the email, thought, okay, well, that's a reasonable thing to do. It's now people are aware of not only the performance Tesla has had since 2018, but also people can sort of evaluate, hey, like, judge is arguing that we didn't have enough disclosure. Does that matter enough to us? Or are we down to approve that prior shareholder package the way it was, with the knowledge we had at the time, reiterating that after somebody's highlighted it now? You just saw on CNBC somebody make the argument that maybe shareholders wouldn't or couldn't. Now, the wouldn't line is interesting, and there are two parts here. So I think these responses are interesting. So two responses, we'll call it, from a law professor, is that number one, will shareholders approve this? So that's a question. I mean, like, are shareholders going to say, yeah, let's pay you for the past 6 years of work because of that promise, but then you're potentially, her phrase was, wasting corporate resources paying for past work, right? So this becomes a question, sort of the debate between how should you say it, fairness and value for the company, right? That was an interesting argument. And then, of course, she also had this response that suggested, would shareholders even be allowed to? Would a majority, she said, a majority of shareholders even be allowed to waste corporate resources? Or would you need a higher standard of voting? Waste corporate resources, or would you need a higher standard of voting? TBD, and expect lawsuits was the way she left it. Interesting. So we'll see. Obviously, sucks to get your pay rug pulled for 5 years, but those are some interesting arguments I haven't heard before on CNBC there. So then we have, let's see here. Okay, so ASML reported this morning, and we've got a little bit of a drop in Bitcoin. Now, I personally was expecting this drop in Bitcoin to happen at the end of the day yesterday. I was really surprised that we didn't, mostly because after Jerome Powell's sort of hawkish meeting, I thought the markets would sort of look at this as, uh-oh, this is problematic. Jerome Powell is flipping in the wrong direction. And what we got is a pretty exuberant market going into the close. A lot of buy the dipping, both in Bitcoin and securities. And that may be because we've had quite a bit of a sell-off over the last few days. And it could just be the start of a longer-term sell-off, or it's just a little blip in the road. But either way, it was odd to see that happen after JPow's meeting yesterday. Part of that could be because we did have some weakening from the Israeli position as to when we might get a counterstrike. There was an argument that we wouldn't see counterstrikes until outside of Israel until the end of Passover, which would be April 30th. Other people argued that okay, Israel, and then then we end up seeing strikes over the Israeli morning in different parts of Israel, but those are internalized to Israel, and so while we're sure there'll be other, frankly, strikes against Lebanon or other areas, it seems like Israel might be trying to slow down how quickly they counterattack. Again, who knows? That's could all just be speculation, rumor at this point. However, we are seeing, at least here in the AM, BTC drop a bit. I'm not exactly sure why. I'm going to try to figure that out. But we know we have some historic rain in Dubai. We aren't really getting any data today. I mean, we get a beige book from the Fed. Yeah, let's see. Israel will do everything it needs to do to defend itself. Number of injured after Hezbollah attack rises. Yeah, so these are attacks inside of Israel. There was a potential drone attack and then a counter response by an attack on a community center inside of northern Israel. And this was a community center where they say individuals were using it as like a launch site for drones or weapons. And then there was also a terrorist depot, supposedly, in southern Lebanon that was also attacked back. So you've still got some of this tension going on in the northern portion of Israel. But I'm not exactly seeing a huge escalation here, at least not yet. And we might not actually see that at all, or we might not see that until the end of the month. But I think that sort of calming reaction, if you will, the idea of, okay, we're not going to strike back right away, potentially gave markets a little bit of enthusiasm going into the close yesterday. And both of those were unexpected, right? Yesterday, I was expecting to be more bearish on a potential Israel attack or counterattack, and I was expecting to be bearish Powell. And while we were right about what Powell said and what he was likely going to start alluding to, is shocking. The market didn't react to either of those. So interesting. And I think what some of the arguments are being made about this is things could have been much worse after JPOW, but for some reason they weren't. Is it because of hope now that earnings will come in strong? And then that's where we just had ASML this morning that reported a miss. I think the stock's down like 4%. ASML. Let's see here. This is, it's down 4.8% right now. Okay, so let's go out on the day chart. So this is ASML. You can see the topping pattern it's been in, and we're down about 4.75 now. So we're going to drop to about here where the mouse is, and it's pretty tiny, but so we'll get a little red candle there, but 4.8, it's not really that big of a deal. But what you're going to find with ASML is, let's take a peek here. ASML had a Q1 orders miss for estimates in Q1. It looks like gross margin came in stronger at 51% versus 48.4%. Bookings came in at $3.6 billion versus $4.6. That's almost $1 billion miss on the expected sales in Q1 of ASML. Now that was a little surprising, and they also confirmed a slightly lower gross margin guidance for the rest of the year. And this was really a stock a lot of folks thought would be an early indicator of potentially artificial intelligence ordering. And so we're down about 4.7 on ASML right now. What's interesting is SMCI, which was up 10% yesterday, which was remarkable. It went from like 880 to like 976, as you can see here. It's actually up after this news. It's up about 1.73. So you're not necessarily seeing a broad-based move in AI. NVIDIA's up about 65 bips. So again, not really seeing a huge move in AI stocks or really broader indices as a result of the ASML miss. You can see AMD over here still stuck at the line about that 164 level. It's fallen off that quite a few times. And Tesla's up about 57 bips. The Qs are sitting over here at 23 basis points up. And we've been pretty stable in most of the pre-market as well as most of yesterday. It's a pretty stable day yesterday despite JPOW's rugging, I like to say. The only thing that's really not stable right now appears to be BTC, which I'm not exactly sure why. Today, BTC is moving down, but we'll keep kind of paying attention to what BTC is trying to signal. What could it possibly be? I don't know, but we will look. So I will do that right now. Anyway. All right. Some talk about potentially a stablecoin bill. I saw that yesterday. I doubt that's going to go anywhere anytime soon. SEC with their phones. Yeah, I don't really see anything really exciting in BTC. We know the halving's coming up, but usually we don't see this random disconnected morning sell-off from the stock market. Usually they move together. Oh well. Let's see here. One trader suggests some other positive catalyst needs to happen for bullish sentiment to return to Bitcoin. Yeah, that's fair. You could just be on a downtrend right now. That is fair. Yeah, oh well. Alright, so let's see what else we have. So we've got that shareholder vote coming for Tesla. And this is... Let me pull up the actual full document. Oh. Alright, we'll let the Dell catch up. There we go. Wow. Loading shareholder filing apparently takes a long time. There we go. That's just frozen though. It's kind of funny. Alright, whatever. Whenever that decides to cooperate, we'll flip over to it. I just restarted this sucker too. That's it. It's the end of the world. The SEC.gov is taking over the computer. It's over. Ah, I got it. Yeah, but boy, I can't even scroll. There we go. So this is what it looks like. And we could call 2023 a watershed year for Tesla, with many defining moments. However, for Tesla, in light of our past accomplishments, 2023 could be called a typical year of triumphs and achievements. In 2023, the Model Y became the best-selling vehicle in the world. We launched our new Model 3 lineup. That's Project Talon. And we saw tremendous strides in our quest for FSD and began deliveries of our innovative, highly anticipated Cybertruck. Also witnessed the beginning of a transition in storage and services. It's all very exciting. Very exciting enthusiasm here. We recently announced a company-wide restructuring that reduces our global headcount more than 10% globally. Over the years, we've rapidly grown multiple factories scaling around the globe, and with this rapid growth, there has been a certain duplication of roles and job functions. We believe it's extremely important to look at every aspect of the business for cost reductions, increasing productivity. Yeah, a lot of people are reading into this and suggesting that, is it possible that there's a negative cash flow quarter coming that would end up creating some fears for the balance sheet for Tesla. Remember, Tesla's balance sheet isn't as robust as some of the hyperboles like to point out. They argue, oh, Tesla has over $20 billion of cash, and they conveniently ignore all of the current liabilities the company has, which once you actually really look at how much free cash they have, maybe they've got $3 billion of free cash. Well, what happens if you go negative $1 billion on a free cash flow basis in one quarter? Well, now you've got 2 left. So, are you going to have to raise money again? That's a concern. So those are some things that people are very excited to see in the next Tesla earnings call. And then, of course, here, this is just where we have the approval of moving the state of incorporation to Texas, the ratifying Elon's pay package from 2018, and then re-electing James Murdoch and Kimball Musk to the board. So here they talk about restoring Tesla shareholder democracy and declaring that 73% of voters approved the pay package back then. And so for a court now to say it's not entirely fair is basically unfair. So let's verify it. Anyway, so looks like the shareholder meeting will be June 13th at 3:30 p.m. All right. Let's listen in over here for a moment. Oh, talking about Boeing. You know, I heard something about Boeing yesterday. I thought it was quite interesting and motivating. It's, you know, when one door closes, another blows open.
And it's beginning to do it. So I think the FAA has to be held accountable as well.
What is the overall message, though, Senator? I mean, what do you hope for the committee to accomplish by hearing the whistleblower, not just to make sure that whistleblower employees are protected, but in terms of that corporate culture that doesn't value reports of potentially unsafe practices? What needs to happen here? What can you do to change that?
First and foremost, accountability. There needs to be a continuing Department of Justice investigation about the possibility that the deferred prosecution agreement was violated here, not jumping to any conclusions, but accountability is very important. Our committee is going to have more hearings and more investigative steps involving the airlines.
Yes, more hearings on Boeing. Yes.
To testify, which we will do. But longer range, the standards applied for manufacturing have to be reviewed, and that's an FAA function as well as Boeing. The entire aerospace industry ought to be looking in the mirror and asking itself whether it's doing the kind of work that it should be, and really keeping faith with the great employees who are also, by the way, protected by unions in Seattle, not in South Carolina, in Seattle and the state of Washington.
This is highly boring. We're getting off this. So apparently there's this thing called the Hindenburg Omen. Now, I've never heard of this, but if anybody else has, let me know in the comments because it seems interesting. So I'm going to write this down. The Hindenburg Omen. This is really interesting. So the Hindenburg Omen, the way it works is it looks at the NASDAQ and compares the percent of stocks making new 52-week lows to versus 52-week highs. Okay. Got it. So over the last year, which stocks are at the lowest point they've been in the entire last year compared to the number of stocks making, you know, all-time new 52-week highs. So in other words, they could be off their highs of last year. When both rise above a certain threshold, and we are when both are rising above a certain threshold, and we are near a 1-year high in the index, the signal activates. Oh, okay, so the signal's like either on or off almost. For NASDAQ, more omens have triggered so far this year than in any calendar year since the 2000 tech run-up. Wow. That's kooky dookie. So I'm going to write that down. More omens have triggered this year than any prior since 2000. That's interesting. Obviously, it's just one chart. But previous rises in the number of omens have coincided with the NASDAQ selling off or moving sideways. Oh, that's interesting because we've seen quite a bit of sideways movement. That's actually something that I've been thinking about too. Is like, can you just sort of move sideways? You know, like crab walk in the markets for a while. Wouldn't be unsurprising to me. Okay, so that would be forecasts either a sideways NASDAQ or sell-off. Okay, interesting. And let's see, that would be... This is for the NASDAQ exchange, mind you, not the QQQs. But most of the stocks on NAS are going to be like your more fintech and tech stocks versus the NYSE, which attracts more of your Dow Jones style stocks. And obviously, it seems like near term we're not, you know, walking into a recession. But then again, some of that stuff that we're getting from banks, see, you know, they're trying to say, hey, you know, but maybe the omen doesn't matter with no recession coming, right? Maybe omen doesn't matter with no recession coming, say analysts. But then obviously, you know, the counter to that is, wait a second. Wait a second. Is there no recession coming? Or is a recession coming? So the inverted yield curve obviously thinks that there's a recession coming. What I thought was very interesting is that regarding the Tesla layoffs that were announced yesterday, you don't necessarily, or not just the layoffs that were announced, but the job openings that were removed. See, yesterday, Sawyer posted this here. Tesla has removed nearly all job listings in North America, the Middle East, and Africa. And so I quote tweeted this, and I said, this is very bad for the entire economy. Powell basically says we're losing confidence on inflation and rates can stay higher for longer at the same time as jobs start to turn, like companies, when companies like Tesla kill openings. Both of those things combined are very bad because what you're doing is you're removing the capacity for people to continue to earn jobs while at the same time keeping the economy more restrictive. Now, you've got somebody here called Fady Fatty, who says meet FUD. And that's fine. Because remember, fear, uncertainty, and doubt does not mean fake news. Like, yes, this does create fear and uncertainty in the economy. So you're not wrong. Now, you might be saying it to try to be like, a sarcastic insult. Or the reality is, when we look at the data, we start seeing problems that might be more broad-based in the economy. Removing all job listings. Again, it's either idiosyncratic, like it's just Tesla only, or you're going to start seeing this a little bit more broadly. So I think that's actually somewhat of an issue that is worth paying attention to, and maybe that omen they're talking about is something that could actually have some reality if it's warning us of 2000 again.
Get off the plane.
So you want to get used to everyone around you, so that you just you're
Yes.
trapped together
Yes,
for a certain period of time.
Basically.
Are you flying
Basically.
window or aisle?
No, I'm pretty sure I'm aisle. I think I'm aisle.
I don't know. I'm not keeping track. I'll see you tomorrow in DC.
Transient trains a thing, you
I like
on
it.
and off.
I
on
think
and
it's
off.
good color.
So you've got
It's
one
not-
eye on
it's
your
not
bag,
that many
just making sure the
stops.
bag's
It's new
not being
ideas.
stolen.
Oh my God.
Really?
Really?
It's rough out there.
Oh, give me a break.
It's dangerous.
I hear somebody asking about the trigger. The trigger is bearish because it's saying basically near-term sideways or sell-off. And I'm gonna try to zoom in at other times this has fired, and I'm gonna write that down. Other times this has fired. So let's write that down. I just have to sort of zoom into this, and it's a little difficult. It's actually very difficult to sort of tell. Number of omens. I see. Okay, you could sort of count the number of omens. Okay, so we had 20 omens. Oh gosh, I feel like I'm like on Legends of the Hidden Temple or something like that, talking about omens here. 20 omens in 2024. There were 17.5 omens in 2000. Then you had, I think that's 2022. 2022 had about 8 omens in 2022. And then you had, at the end of, you had about, 4 omens late in 2019. And then you had like 7.5 omens around 2015. Around early 2015. So obviously that didn't really coincide with anything, I don't think. And then you only had like 4 omens in 2007. That's weird. So I don't know how perfect it is if it misses the Great Recession. But yeah, it's a bizarre little tool. And so this is specifically an omen on tech. So this is specifically for stocks on the NASDAQ exchange. More likely tech. There we go. Huh. All right. Very interesting. So I'm always curious to see some things like this. Let's see. LVMH and Adidas today suggest luxury recent sell-off was overdone. Oh, interesting. Okay, so LVMH reported that they were going to have slower sales, and the stock like tanked. But today, when we actually got earnings, the stock actually didn't do so horribly. Apparently, we're trying to figure this out. Here's LVMH over the last maybe 6 weeks here. If I go out to the day chart, you've seen a little bit of a sell down here. We're on the average candles. And I guess today in Euro trade, it's not going as bad. Got it. Okay. Yesterday could have been worse. Yeah, we talked about that. Yeah, I do think that. Yesterday was remarkably fortunate for bullishness in the market. It was very odd to see such a strong close yesterday. Oh, thanks for the $2. Appreciate that. Yeah, I'm not very enthused about the technicals on the Qs myself. Whether we call it a bear flag or just straight up losing support here. I've got supports at 438 and 435, and we just closed under them. So we don't have a full candlestick under them yet. We need a full. I guess you could say we do when you unaverage the candlesticks. So yesterday we got our first full candlestick under these supports. We average out; it doesn't show as well. But let's see what happens today if we get another full day under these or what. But it doesn't surprise me that there's some topping going on. We've been talking about this topping going on since the beginning of March. And it's been very difficult for stocks to come up above that. Even let's look at we know Tesla's at the bottom, but even look at a Microsoft. See, look at that. It's been topping out since March. It's been getting stuck. How about Goog? Goog. Okay, Goog's actually been trying to move out through it. It's been trying to break out. And then if I look at Amazon, I think Amazon's been doing decently as well. Yeah, Amazon's just getting rejected up here at this higher fib. The 189-ish level. So we'll see how things go this morning, especially after those ASML earnings. We're leaving ASML down about 4 and a bit here. You can see it's mostly trading sideways here in the pre-market. So the weakness seen at ASML has been felt more broadly by some other chip-making equipment firms such as Applied Material, KLA, Lam Research, all falling in pre-market. Let's see. What's Applied? Applied Materials. AMAT. It's only down 1%. Okie dokie then. So, let us find out what else is being said.
Toward the idea that, hey, we're not going to be cutting unless we see significant changes in the economy at this point. And the market's starting to price for that. In fact, the market's pricing almost a 30% chance of a hike later this year. I don't think that that's going to come about, but the chances of them just being on hold the rest of the year are way higher than they were 3 months ago when we were pricing for 6 or 7 rate cuts.
I guess this is the thing, Ira. The market moved before Powell. Powell is almost a lagging indicator at this point. If the market is already pricing at a 30% chance of a hike. So if we get the next meeting, as you say, and they are delay, does the bond market have further to move?
Yeah, it could have further to move, and I think the 2-year yields could move up just a little bit more, maybe to about 5.15%, because at some point the market's going to continue to price for the Fed to cut at some point. It's just that they might not start to cut until 2025, and then if they do, maybe it's not.
That's probably one of the biggest fears, is that they don't cut until there. Getting any other SH9T pray messages? No. That's funny though. No, nothing crazy. Let's see here. Boston Dynamics. I saw they retired their robot yesterday. I haven't seen any kind of new robot. Let's see. Would you look at the bounce we got on Tesla yesterday? Yeah, let's see here. So, lines up with 2023 dip. So, okay, well, in that case, I'll go to, the week chart here. And let's see what you're talking about. So, yeah. Yeah, it looks like we've got that 2023 dip right here. April 2023. Yeah, it looks to almost perfectly align with that 152-ish 152-ish hit there. Yeah, I agree with that. 152, 153, yeah, right around there. I think yesterday we didn't go down to all the way to 152, so I think you're right. 153, but that's, pretty close. Somebody here says the summer may suck for markets. Let's see here. Can Europeans invest into house hack? Yes. Yes, you can. Go to househack.com/2024. And let's see here. Somebody says tax return money came in. Finally have cash to buy any incoming dip. There you go. You blew it all today. The market's down 10 basis points. Buy the dip. Long run probably doesn't really matter. So, all right, let's listen in over here.
On the face of it.
Oh yeah, the beige book does come out today. That's like the only catalyst today. Boring.
Conversation with Franklin Templeton's Sonal Desai and Nomura's Matt Rowe. Great to see you both this morning. Sonal, as we were just saying with Ira, it is a perhaps long time coming of a repricing this market. Let's be honest, we had a ridiculous amounts of cuts priced into the bond market to start the year. We've phased that out. Even Jay Powell is needing to admit to himself that maybe they're not going to achieve as many cuts as they want. So are we done yet? Or is there still more work to do in this bond market to price out further cuts, maybe even more hikes?
So I think actually the issue of hikes, it's a low probability event. We really need to have a significant reacceleration rather than...
Yeah, I actually agree with this. I don't, like, what Powell talked about yesterday was, he's like, look, we could just stay here longer. But it did not seem like he's flipping at all on the idea of we're at peak. Like, that was not indicative at all in Powell's speech yesterday, which clearly he wanted to use it as a messaging vehicle since he wasn't even asked about what he was talking about. He just came with his prepared remarks and had to get this out. This little sample dample about, hey, we're not doing as well as we had hoped, and we haven't been getting more confidence. This is the first time we've had Powell be a little bearish on the Jan-Feb March data. But what's interesting is he didn't indicate we need to be higher. He just indicated longer. So that's very good on one hand, because it doesn't mean rates even more crazy, and it almost kind of gives you a way to say, hey, well, should you buy bonds then? If he just called peak, is it time to buy bonds? It's an interesting idea. Bond yields, bonds are up today, so bond yields are down a little bit right now.
That we would revert to more accommodative policy into that, that steady stream of rate cuts, which is now being pushed back at best.
Oh, I forgot about that. Yeah. You said the first 5 days of the year indicate the rest of the year for stocks. Looks like that's true. If I remember correctly, and that was a while ago. Boy, well, yeah, it was at the beginning of the year. I actually think I have that on eHack, so I'm going to go look really quickly. This is why I love eHack. It just keeps all the research in one place. But I think the fifth day or something dragged the NASDAQ negative, and I think that was supposed to be a bad omen for returns for the entire year. I don't 100% recall, but I'm scrolling back right now. Good thing I don't have to click around. Thanks to having eHack here, we could just scroll up. There we go. All right, so first 5 days would have been like January 5, 6, 7, somewhere around there. I don't know if I actually have it in there, though. I feel like I would. But it's funny. Jeez. Oh, man, that was when we were doing the Epstein files. Oh, look at this. This is like a throwback to history. Atlanta Fed GDP, 2.5%. That's kind of been where it's been. A lot of stuff here from Jeffries and a labor recession coming. Oh, I remember that. And we get to the 8th, talking about Yemen and the Houthis. Oh, do we have the first 5 days? No, I don't think we do. I'm bummed. But yeah, I think you're right. That's before we even had the ETF approval for BTC. But yeah, I think what we had was something that said the first 5 days If they turn red, it's a bad omen for the entire year. I'm surprised and bummed it's not here, unless I'm not finding it. But it should be around there. But oh well, I'll see if I can find it a different way. But that's a really good point.
You know, I'm not an equity expert, so I'm not going to stick my neck out too far here, but equities definitely are not pricing in the idea. If equities at this point are pricing in a protracted rate cutting cycle along the lines, taking us back to the type of rates we've observed for most of the post-global financial crisis period, I think that would be a mistake, because I think that neutral Fed funds is definitely closer to 4 than the 3 to 2.5, 3 that the Fed currently is looking at. And if they're looking at 4, it has a meaningfully different impact in terms of what equities are pricing and where we should see 10-year yields over the medium term.
Matt, let me bring you into this. What do you think of this idea that we're really underprepared at this moment, at least from a risk perspective, that the cutting cycle might be shallower than we're used to?
Yeah, I mean, I would take a more definitive stance on this, that I do think that equity is overvalued, and it's a lot of the hoped for rate cuts are priced into that valuation. So there's a little bit of a tension between those two things, and I think that, you know, the whole point of cutting rates to zero is to push investors further out on the risk spectrum. They got comfortable with being long equity risk premia in multiple forms, including selling volatility on indexes and things of that nature. So we should start to see more of a pullback from that risk attitude. When you look at the valuations on equities, you look at the geopolitical situation, we have earnings just kicking off right now, and we have uncertainty where inflation and rates are concerned.
Right. Actually, you are seeing what I think is so interesting. The greed and fear index has finally moved to fear, and the market hasn't really sold off that much. But look at that. We're at 38 right now on the Greed and Fear Index, which is very interesting. And I found a Market Watch piece on it. Stocks lost money over the first 5 trading days of January. What does this mean for 2024? I haven't read it yet, though, so let me find it here. Let's see here. The Dow Jones Industrial fell 7 points for the first 5 days of January. The S&P fell 0.1%, and the NASDAQ fell 1.1%. Okay, here we go. So the first 5 days indicator. Since 1970, if it's negative, the average Dow Jones gains for the rest of the year after 5 days, well, that's fairly good. So I don't remember this. Oh, is this Dow versus the others? Yeah, because that's good. Like, all of these are positive, but I don't remember that. Okay, this is their... That's interesting. So Market Watch is like, JK, it doesn't matter. Maybe it doesn't matter then. So that's interesting, because I'm pretty sure a lot of people talk about that being bearish, but here's a Market Watch piece that we're looking at, and they're like, you know what? Doesn't freaking matter. As you can see here, since 1970 and prior to 1970, doesn't matter. Average gain, it was positive and all, and here's the number of times it was positive. So you don't really see any correlation in this chart. I'll keep looking. But that's interesting. At least you have a counterbalance to that. So maybe that doesn't actually matter. But market momentum right now, neutral. What do we have here? Stock price strength going into fear as you're rotating down here. This is the net new 52-week highs on the NYSE. Breadth, so fewer stocks going positive. Extreme fear on puts and calls. I've noticed that puts have been a little more expensive over the last week. I've been, over the last 3 or 4 trading days, I've made more money on calls than I have on puts. Like, puts have been a little more challenging, especially after yesterday, where, you kind of get rugged by Jay Powell in Israel. So you're expecting bearishness. You get Powell bearishness, and then nothing from Israel, but then market doesn't care. Market vol, fear, safe haven demand, fear, greed on junk bonds. Yeah, so this was at extreme greed not that long ago. Certainly greed a month ago. I think 2 months ago we were at extreme greed. We could look at this here. Yeah, extreme greed in June, right before the crash. December and January. End of January, middle of Feb, and beginning of March we were at extreme greed. So that was a pretty toppy time there. So we've really come off quite a bit here. But the stock market hasn't really fallen that dramatically. So it's an interesting indicator. Okay, let's listen in more.
a possibility of the two sides finding their way to a better modus vivendi.
Switch that. That was boring.
Travelers, ASML, JB Hunt got some price target cuts on Tesla and other calls on Urban, GE Vernova, Elf, and Danaher when we come back.
Okay, boring. So, here's a Wall Street Journal piece. Let's see if there's any difference on it. So, here's why investors track the first 5 days. Oh, okay. So, and then it shows you in blue what the gains are. And so look at the first 5 days. Okay, so this is for the S&P, not the Dow. The other one was for the Dow. So first 5 days negative in 2000, got a negative 10% drop. Negative 1.8% in 2001, you got a 13% drop in the market. Here was a negative 2005, you got a plus 3%. Negative 2007, you had a plus 3%. Negative 08, negative 38% in the market. Here's a negative 0.59 where you got a plus 11%. Negative 5.9 got a plus 9%. And then here during 2022, you had a negative first 5 days, 1.87, and you got a negative 19.4. So I wonder if it has to do with the magnitude. Like, it seems to be if the magnitude's under 1%, it doesn't matter that much. Is that true? Yeah, it seems like every time the indicator for the S&P 500 is over 1% down for the first 5 days, you get a pretty negative read if you look since 1999. So, nope, that's not true, though. Still not. See, 2005, you had negative 2%. So, I don't know. That's not too useful. That's a little messy. And I'm pretty sure the S&P was down like 1.1 we saw first 5 days. So, but anyway, I don't know how indicative that is. But that's what people are referring to. Okay, good. So 14 minutes to the bell. And yeah, let's see how the sticks are moving. So where's BT Sizzle? Yeah, BT Sizzle's still sitting down in the hole. 62.2. These were the lows of yesterday-ish. I mean, I think we got down to like 61.7. Okay. So we got some lows over here. A little bit of a floor right here. I'm actually going to go ahead and draw that floor. And what I'm going to do is make sure that's a little yellow. And we're going to draw that right there at about 61.7. So we'll see if we end up getting any kind of convergence down here. I did also draw sort of a little bit of a trend line that previously looked like it was a resistance. And then once again became a resistance over trading yesterday. So I'm watching BTC here closely. Obviously, we're on a longer-term downtrend off of 73,000 as well, just over the last month or so, which is still relatively short-term, but whatever. NVIDIA today does not seem to care about ASML's miss. I find that quite fascinating. And neither do the Qs. Qs are sitting at 47 bips right here. So let's see here. Okay. I will look at this today. So the AI enthusiasm, I wonder if that'll hold following ASML. And so I don't really trust the pre-market. But what I'm going to do is I'm going to write down SMCI. So I usually like to write down a short list and a long list. And usually it's when I don't pay attention to my list, I mess up. So my list, I have to trust myself and listen to myself. And my intuition today is that after this ASML data, super microcomputer should not be up, 13-ish% over the last 2 days. That's 2% in the morning and 10% here. So SMCI is an interesting one that I wouldn't be surprised to see some nice red candles on the day, especially with what almost feels like a head and shoulders over here, although it's a little crooked. And, at $1,000, you're going to start hitting some of the psychological resistance. We have bounced off of $1,000 before. Look at that. You've almost got 3 touch points right there 1, 2, 3 on the candle wicks. So, I mean, that sounds reasonable that you would potentially get a hit there at 1,000. So, I'm going to watch what happens at Supermicro at 1,000. Then, let's see. Everything else feels a little just, again, toppy, but market's happy today, probably because you don't really have negative catalyst today. I mean, nobody's really going to care about the beige book today. And, I mean, not really getting Netflix earnings yet. You do have, let's see, who reports today? We got ASML, Abbott, yeah, Las Vegas Sands. Okay, big deal. So tomorrow we'll get TSM and Netflix. That'll be a lot more interesting, and those will be after the bell. So you won't actually trade those until Friday. DR Horton, and then Friday we'll get Procter & Gamble, American Express. I'd really like to see American Express, especially since we're starting to see more losses from the banks at credit cards, or on credit cards. I can't necessarily say go short American Express, though, because as you saw what the banks did, is they just took more charge-offs but lower allowances, which is just odd. Yeah. Interesting. So, what's HSY? Let's see, HSY. Is that Hershey for cocoa prices? Yeah, their stock has been down because of some of those cocoa prices. Cocoa prices make up like 20 to 25%. Yeah, just remember, it's true. Yeah, exactly. So, hey, if it breaks 1,000, maybe you just go calls, you know? So I think that's, if you test 1,000 and break it, maybe that's the play. Wonder how AMC's doing this morning. I know that one's been rallying in post-market. Yeah, look at that. Again, up 8% right here. The AMC is one to watch because you're going to wake up the cult following again. And so AMC is going to be one to watch. What else? What about, I don't know that Tesla. How much of a move are we getting here, Tesla? It's not very violent. No, kind of bleeding out in the pre-market. Up 50 bips. The concern is that the entire market gets dragged down today by something, you know, mostly because like my BTC indicator is bothering me. Like why is BTC falling? I still haven't figured it out. You know, Coinbase is at a really strong level here at 218, but it usually trades down with BTC at 62.2. Especially if when the market opens, we see BTC drop down to like 61.5. Coin's going to drop rapidly. Yesterday it was down as much as 6 to 7% when it was sitting around 61.7. So, you know, depending on the movement of Bitcoin today, Coin can move rapidly down. The wild thing is, it should be good for Coinbase because Coinbase is just going to make more trading fees. Yeah, I agree, Matthew. The fib lines and the resistance lines, those do really well. It's sort of like, just follow the lines. You know, I think that's the best trading strat. Trust the lines. I'm finding exactly that as well. So, Powell rate cut warnings mean headaches for the rest of the world. Yeah. That doesn't surprise me because you're gonna hurt currencies in other worlds. What am I in World of Warcraft? I'd like to be. Boy, I haven't played that one in a while. But that is interesting. I mean, consider Fed delay hurts a global. So how does it potentially hurt the global? As Fed delays rate cuts, our dollar likely stays stronger. That, for other countries, weakens their currency, and let's see here. If you weaken their currency, so like let's pretend this for a moment. Let's say we're the euro, okay, and we're gonna cut sooner. That weakens their currency. Why does it weaken their currency? Why? Less people buy your bonds. Consider ECB. Lowers rates first, less buy Euro bonds, more buy US bonds or treasuries, more buy treasury bonds, more demand on dollar, and less on euro. So, dollar up, euro down. Now, in that case, you're European, it takes more money for you to import from the United States or to travel to the United States. And it potentially makes it easier for Americans, though, to buy your stuff. So it could help your exports. So that could help euro exports to U.S. So it's sort of like a give and take, right? Strong currency. What does it do to inflation, though? That's an interesting idea, because does that actually help or hurt your inflation? I don't really know. If you have a weaker currency, it seems like intuitively you would need more money, so therefore that would imply inflation. But I don't know how much of every consumer good really cares about global currency movements. So let's see what they say in their article. The risk is the longer we see big central banks waiting to cut, the bigger the risk is to the other. Oh, okay. So their risk is the global economy. I see. So global recession. A weaker euro could see imported inflation pick up. That's what I said. It makes it more expensive to import. Right. But raises prices for imports. Okay. It sounds like the bigger universal concern really is just not so much that. Bigger concern is just globally recessionary to keep rates overall higher around the globe. Okay, that makes sense, because then you might also be selling might also sell euro bonds, which raises rates in your area. A little bit. It keeps them a little higher. I don't know. The impact of that I don't think is very clear. So I don't know how useful that is. But whatever. It's what some folks are speculating. All right. Market seems to be rallying into the open here. Q's up. BTC's trying to move up about 150 bucks there. You got Tesla, Applied Materials down following ASML. The Q's up. Mostly because you've got Microsoft up, you've got Nvidia up, you've got AMD up. AMD is sitting on that 164 line. We were trading that one yesterday in the course member group. Apple. Okay, so let's see here. Let's see what Doomberg has to say. Okay.
Tools can help. You can automate email and...
Okay. That's just an ad. Come on.
Digital challenges like this all the time.
They're both uncommercial. Of course they are. Okay, no problem. So let's see what's going on with bond market in the morning. Bonds down about 4 bips. Down about 4 bips. So on the 10-year. And then you have... Let's see what the 2 is doing. That's going to give us a little bit of a tell on the inversion. 2 is stable. Okay. That's interesting. And then gold's still at 2,400. What's happening here? Oh, look at this drop. Look at this pre-market drop. AMD just dropped a bit. Tesla's now dropping into the open. The Qs aren't really moving into the open. Okay, so we're getting some potential red. This is what, I think Bitcoin has been trying to forecast. As Bitcoin dropped from, 64.5 in the middle of the night down to 62.3. So I'm nervous about a red open. But so far, everything's very green. Also, I'm not sure why Tesla would move all of a sudden like that. 2 minutes before the bell here. But, stocks do funny things. So does Bitcoin. Yeah, I don't see anything other than that shareholder approval for the June meeting. That's really news here. Okay, so we have some work to do here. Alrighty then. So that leaves us with the beige book for Catalyst and the market roughly about to open. So let's get ready for the market open.
And execute. This is going out to a broad audience, Jim, much broader than ours.
All right.
Pretty much anyone, as we know from the New York article, which was about the rent. I would emphasize that there's a faux horse race. There's a belief, like the other day, there was an article that said Sycamore has a NVIDIA destroyer. I mean, are they kidding? Now we take every chip, every Blackwell supercomputer. What's happening is that they're all making Alphabet, Microsoft, they're all making chips in conjunction with NVIDIA, and NVIDIA is actually helping them because NVIDIA knows they can't produce enough.
Okay, Tesla just went red. We had, that's really interesting. They were up like 0.5% there. Coin has got a big red candlestick coming in here. I've got red on the Qs coming in. I've got red on AMD coming in. I've got red on Amazon coming in. Goog's holding on. I don't know if this is just an early sort of market kind of move here. What's going on? SMCI is at about 1%. Let's see how stable this ends up being. ASML is dropping a little bit more here. You've got Enphase, interest rate sensitive. BTC is not really moving up. This is on the 5-minute here. So yeah, it's still getting rejected over here at the 62.3 line. You've got Barrick Gold positive, Spice positive. Tesla now down 38. Applied Material. SMCI is still trying to figure out a direction here. AMC is as well. And still, Tesla's coming back. Tesla just went green. So that's pretty bullish. Okay. Q's trying to figure out a direction here. Still trying to figure out a direction for Enphase is down. Let's see here. Restoration Hardware is up. Boy, yeah, they had a nice little drop there. ARM's rotating down more. Interesting. And then AMC is getting stuck. So I'm watching that. I'm watching a lot of these actually just getting stuck. Getting red on Coin. But the Qs are coming back. Boy, the first 15 minutes are always so entertaining. So you just have no idea which way we're going to go. Let's see here. Okay, AMC is now pushing back to 7. Yeah, the Q can't hold on to it. It's stuck at about 1/3. Coin's going neg, which makes sense because of this BTC move. The question is, yesterday BTC was Coinbase was down about 6% at this moment. So let's see here. ARM, triple Qs. That's the short Qs, so that's because we're still 1/3 positive. It seems like mostly things are green. Well, Robinhood's green. New York Community Bank. Wow, I didn't know it was under $3 now. Cheesecake Factory's green. Disney's trying to rotate down. Reddit's trying to rotate down. ARK is trying to rotate down. Piton, Dave & Buster's, give or take, 40 bips here. S-Bucks is back at $86. First Solar's down. It would make sense that you see a little bit of pain on some of the interest rate sensitives today. Nvidia's rallying. And Tesla is down 1/3. Coin's really only down 15 bips, so not a big deal here. BTC's stuck around its area. Not really any kind of serious moving here. Let's listen into what's going on at the open, and I'm going to see what others are saying too.
For to remain an American steel company that is domestically owned and operated, that would continue to seem to say, Nippon, you're not going to be able to own this.
There was a time
Now, CFIUS is the only way, potentially, through which they can really effectuate that occurrence, because there wouldn't appear to be any others. This obviously is Japan, our significant ally, Nippon, which has agreed to invest in the assets here in the U.S., but has run afoul so far of the unions.
Well, not since Hyman Roth did we think that U.S. Steel was a big company.
Okay, BTC back to 62.4, so that's good. Let's see. Tesla's still getting stuck down about 2/3 now, and it's still continuing to rotate down, where Coinbase is really finding support at about that 218, 219 level right now. And SMCI is continuing to rally. It's up 2% right now. Still some bleed, though, on the Qs. Enphase trying to come back. It doesn't feel like it's trying to be a bearish day. But a lot of things. Yeah, Apple just shot up again. And it's just really ARM moving down. So it seems to be one of the few. There just aren't that many red right now. ARM and Tesla. Tesla kind of keeps going down here. But I don't know what's dragging the Qs down. I mean, I don't have every single stock in here. But you know, you've got Tesla rotating down about 1% here, and I don't know what it is, but the Qs are getting dragged. So let's see here. Okay. Tesla continues to rotate down. Coin's now down 60 bips. This is such a weird open. Nvidia's topping out. AMD went negative. ARM's negative. Okay, yeah, here we go. So where are the Qs? Let me go to QQQ. And let's see here. Nope, Q's trying to go green again. There you go, right back up. See, look at that. As soon as you think there's a direction, right back up. Tesla was down about 1%. Let's go to the non-average. Yeah, look at that candlestick. Look at that. Look at that green. Oh, wow. All of a sudden, coin's up 1%. Where's BTC? 62.4. Trying to break through the line over here. Coin, just look at that buying pressure on coin. And right back to green on the Qs. Well, I mean, you were green, but it was down in the 20s there for a moment. Wow, talk about volatility. Look at SMCI. It's going to have that test at 1,000. So I'm going to watch 1,000. And then I feel like, what are we bouncing at here on Tesla? Feels like 155 on Tesla. 155, 153 seems to be where it likes to bounce. We'll see if that happens again. SMCI is about to be at 1,000. There it is, 1,001, right through it. Coin's up about 1% now. You've got Q's up 43 bips. And, ooh, look at Enphase even went positive. Wow. What's BABA? So I see somebody talking about BABA. BABA is up about 50 bips. But, you know, it's in the 60s. It's in the 60s. Yeah, somebody says everything's green. Yeah, it really feels like everything's green. Let's AMC's up 9. And then right here you could see you have less than a page of red right now. It's ASML, Reddit, Applied Material, Intel, Astera, Tesla. But otherwise, you're just up here. Let's look at AMC. AMC is trying to push up on this. SMCI is now up 3%. Right over 1,000. AMC dropped down here to about 285. And yeah, keep watching this. Let's listen to Cramer for a moment.
He's putting together basically a coalition of the countries that have, say, 200 million people.
Who's
that
this?
are great markets instead of the colossus that is China, that is no longer a great market. And I think it's something to watch.
Yep.
So you put a factory into place because you want business. Indonesia's a huge country. People don't understand how big Indonesia. They're China. Apple's
very interesting. By the way, AMD, its topping pattern over here, it just can't stay above the 164. It always seems to push below that. And then Nvidia, really struggling to try to really get into those 9s and stay in the 9s. Tesla's getting pushed down by Vivep. And Q's over here, still stable though. 4% on SMCI. So let's try to see, now that it's above 1,000, where's this sucker trying to go? Let's see here. So, I mean, what do you argue? That was a candle wick all the way up to 182, maybe, or 1050, or 1082. Here's a 1052. I don't know. It's almost like you're trying to break out of this downtrend right here. So that's it's probably a tough short. Okay, let's go back to averages. All right, let's go back over here.
Start thinking that there's a mosaic of business where we're going to say, you know what, all these analysts who are just totally focused on China
Fake.
will not see what's happening in these other countries where there's a commitment. It's almost like there's a Belt and Road Initiative by China, and wherever they go, they give money, and suddenly there's a lot of business with China. He's doing an Apple Belt and Road, and I think it makes all the sense in the world because these other countries count. We're so China-centric, we don't realize that there are a lot of people in Indonesia. David, there's a lot of people in Brazil. That's why the Eagles' first game is being played there.
Is it really?
Yeah, Friday night game. I think we have it.
In Brazil.
Let's listen in over here. Oh.
From the tech sector, that doesn't mean there's not still a lot of pressure on earnings. This is a group that is expected to definitely post the strongest earnings growth among the S&P 500 companies. In particular, the top stocks in the S&P are still expected to lead the rest. Though I will say that is not the embedded expectation going forward. This is supposed to be basically peak growth. So there is pressure on the rest of the index as well, not necessarily to perform in the fourth quarter report, but to guide us to say things are going to get better for the rest of the year. So the pressure's on for all companies to generally put up some decent numbers for Q1 and really guide us.
Yeah, earnings are going to be critical this season just because we are in the face of, frankly, higher rates for longer. And so it's just all going to come down to earnings. Okay, yeah, nice move there on BTC.
Yeah. And that's why yields are going higher.
I think that's a really, really important point to make is if what we're seeing is yields are selling off because growth conditions are improving and that means the demand outlook is improving, that's not necessarily embedded in expectations right now. When we look at the earnings growth numbers, really what analysts are anticipating is much better margin growth from companies. So they're anticipating a slowdown in inflation pressures. They're anticipating some margin improvement to emerge throughout the rest of this year. Top line growth is not anticipated to improve. There's very, very grim expectations, in fact, I think perpetuated by macro forecasts on the earnings outlook. So if we're getting growth beats, and that's resulting in higher for longer interest rates, that actually could be quite a good thing for equities.
Right, there are still consumers, they're still spending, they're helping corporates have profits. What about the argument, though, that says, well, higher yields mean my equity risk premium shrinks, and they're less attractive to bonds?
So the equity risk premium already has shrunk. The equity risk premium is at its lowest level in 20 years. I think the equity risk premium is a bit overstated for its tactical benefits. It's a more secular story and a long-term story, but the equity risk premium was negative throughout most of the 80s and 90s. You're talking 2 decades of negative equity risk premium. So there's not a lot to say about the risk premium being low. It's just lower than it has been in the last 20 years, and I think that reflects a big inflation regime shift. Most of the last 20 years, stocks and bond yields were positively correlated because inflation was viewed as a generally good thing and reflective of demand conditions. Now we're in a different inflation regime. Inflation could be viewed as supply constraints emerging, creating some margin pressures for the S&P 500. The results of that is you need to pay attention to the equity risk premium, but it's not necessarily your guiding light with respect to allocation.
What about the attractiveness of cash? Because there was a narrative that there was so much in cash that's going to flow out, that's going to go into...
That is true, but then again, people do leave some money in savings. It's worth remembering that.
Yeah, so generally what you find in an allocation is equity is not a substitute for cash. Cash is not a substitute for equity, so that's an important thing to consider. That said, certainly there are other alternatives to equities, which is a very different landscape than we've been in since the great financial crisis. Low interest rates have forced investors to add to equity exposure in order to seek some form of return, even in some cases, some yield.
Right.
Now we have other opportunities, other options, and in a diversified portfolio, equities aren't necessarily your best option for in a lot of instances. That said, you buy equities for growth, you buy cash for yield.
And I was going to say, I guess the irony of me asking that question as I was saying it, I kind of realized that's also a good thing for companies who have all of this cash in their balance sheet that are putting it to work.
Yes, I think this is one of the underappreciated aspects of Q1, and this is something we've talked about a lot, is throughout this earnings season, something we're definitely looking for is a potential sign of a recovery in capital deployment, in particular buybacks. Buybacks were very constrained in 2022 and 2023 as the companies really suffered with contracting cash flow. Now that cash flow has started to recover, we're anticipating at least some degree of improvement in buybacks and improvement in capital deployment strategies in general. We're looking for signs of CapEx. So we should start to see that momentum improve for capital deployment over the course of Q1 earnings announcements.
Right. Gina, afraid that's all we have time for. Always a pleasure to speak with you. Gina Martin-Adams there of Bloomberg Intelligence. Coming up, Boeing under fire on Capitol Hill.
Boeing under fire.
This management overhaul in place and the board changing as well. I do think it is a little bit of either. There was the NTSB with the Senate yesterday. We didn't learn anything really new.
Boeing's safety record in the spotlight. That conversation up next. This is Bloomberg.
Nice. Okay, so now we have, let's take a peek. Let's close this down. Okay, so no, what is this? Aircraft carrier named Kaga heading towards Pearl Harbor. Oh, it's just moving around. Okay. Old news. Wow, very little. Okay, let's see what the suits are saying. And multiple signs send warnings about S&P 500. Stop the bearishness. This is, what are they saying? Roughly 57% of the stocks in the S&P 500 hit 1 month lows on Tuesday, the most since the regional banking crisis. All right. Let's listen into Cramer for a moment.
There are obviously, as you might expect, conversations between the special committee and the Skydance camp as well. But it's going to take more time than that, and it may be more twists and turns from here. You've got a special committee that has its hands full in terms of trying to determine how to deliver value and or what the value really is for the B shareholders here. And it's not just determining the value of Skydance, remember, because the transaction that is currently contemplated both pays a premium for National Amusements, the control shareholder, but also involves Paramount coming up with an exchange ratio to buy the Skydance studio and bringing in a merger with the Paramount studio. And then, as I pointed out many times, in addition, the issuance of new shares, many of which would be purchased by Larry Ellison, for example, and other members of the Skydance group, Redbird, KKR. Special committee's got to decide a lot of different things. What's Skydance worth? It's a private company. You can't necessarily just do it on when they last raised capital. It's,
you know, I think it's very interesting when shareholders get involved in sort of these shareholder decisions, like what potentially happens with the Elon pay package, and what is that going to cost? And so, I mean, the question of what it costs should be obvious, but what does it do from the stock point of view? Technically, when Elon lost his pay package, technically you should have seen the stock rally, because it was basically anti-dilution, right? It was an anti-dilutive move. So it was weird to see the stock not rally on him losing the pay package. Not saying that he should or shouldn't, just saying like the stock should have gone up after that. But right now, what you're getting is Tesla's bleeding today on potentially reactivating Tesla, the pay package for Elon. So anyway, okay, so let's write down some things. Now, it's been about 18 minutes. Let's write down some things here. So what I'm seeing is I'm seeing a struggling Qs. So I'm going to write that down. We don't really have positive catalysts here. And then we have weak AI today. Okay, so we have struggling Qs, weak AI. Okay, you have the momentum trade, AMC. We're just under VWAP. I don't know if we're going to bounce here at some of these SMAs, but we'll see. You've got, I think, Supermicro if we keep this downtrend going, and you could see that in NVIDIA gave up 2% of its gains, ASML's down worse right now. I think SMCI could give back yesterday's gains. That's what I'm looking at personally. I'm watching SMCI, but this is a very dangerous one because it runs up fast. But again, NVIDIA is tanking. You've got AMD that gets rejected again at the 164. ASML's down 2. I think I don't know if we're gonna bottom on the AI bearishness though, but I would watch that. Clearly, interest rate sensitive are not upset today. Tesla's moving on its pay package talk. Bitcoin rallied again. It broke through the line that we've been watching. Apple's moving up. But again, look at the AI sector. Look at ARM, down, plummeting 2.6%. You've got Meta's now moving down. What's MSFT doing? Because it's just a bad omen at these high valuations. Yeah, Microsoft and Astera Labs also trying to go in that down direction. It's a bad omen to have ASML miss by like 25% from their guidance for AI. So that's bad. This could be the start of a tech or AI correction. I'm not sure. And the dangerous thing about it is you could go short AI and get absolutely destroyed. This stuff moves so fast. So you have to be really careful on this. Coin's up about 1%. You can see it got rejected here at 223. And NVIDIA continues its drop here. SMCI isn't actually dropping as heavily yet. It's still nicely positive, which is interesting because, you know, it potentially creates a buy opportunity on a put. What else do we have here? Look at those Qs drop. I'm not exactly sure why the Qs are dropping like that. It's probably just because AI is starting to pull down a bit here. So that's what I'm watching. Let's go to our normal candles over here. Yeah. All right. Yeah, even more of a pull down there. I wonder if, I mean, I don't think there's no news that came out. Well, what the hell's happening? Eka. No. There's no data. Holy crap. Look at the Qs. The Qs just vomited. SMCI just went negative. NVIDIA's tanking. AMD's tanking. ASML's tanking. Bitcoin's trying to go back down. ASML's right here. Here's SMCI. Wow. And Coinbase 0.5% up. Applied Materials down more. NVIDIA keeps going down. You're trying. It looks like you're trying to get a direction here. Look at that. Just like the volume that's increasing right here. All right. Let's see if they're saying anything on this.
Wise, we have 10 of the 11 sectors higher, led by materials up about 0.9%. Utilities up about that much, some relief as yields are down for those dividends. Real estate, interestingly, is still down, even with that relief. Let's check in on the S&P 500 apparel index, because we were talking earlier about the possibility of that antitrust litigation suit to be brought by the FTC against Tapestry and the Capri deal. Even so, over the last 2 days, this sector up 1.7%. Most members of this index today are higher, including Tapestry. On the other hand, Capri is down, not surprisingly, if folks think that there's a possibility that deal might not go through. But again, the bulls are out this morning overall. Something to cheer, Danny.
The bulls are out this morning? Have you been looking at the Qs?
Stocks are also higher after United earnings that we've been talking about today. It is the biggest jump since January. Okay, coming up, we're going to look at some of the market-moving events you need to be watching. That's all next in our trading diary. This is Bloomberg.
This is Bloomberg. This is Doomberg. I wonder if they get mad at me for calling them Doomberg. They probably do.
Freeze in your tracks.
Like, I try to add just fair criticism and commentary to this stuff. But, whatever. So let's see what happened here. So the Qs have stopped their fall. And I'm gonna now write this down very carefully here, because the Qs are now bouncing on. That was really bearish. That was a really bearish moment there for a moment. Are we gonna get momentum to come back? Because if momentum comes, like, is this time to double down? Or was that the pain? Was that the pain of the day? I like this SMCI potential. So I'm watching that one. And let's see here. Yeah, NVIDIA keeps going. They keep going down. SMCI is positive right now. It's trying to climb back. Tesla's bleeding. The Qs are only down, are only up 9. Coinbase is almost flat here. Where's BTC? What is BTC? See, I knew BTC was signaling something, but it did start running. But it's still down from 64.5 in the pre-market. So I love BTC as a trading tool, but I am seeing a little bit of a bounce on AI right now. Now, AMD is trying to come back. NVIDIA is coming back. Maybe the way to do it now is, what I'm going to do is I'm going to watch this to see as we come back up, if we get excited again and we start topping out, maybe that's the time to re-short it. I think, honestly, you could play AI up and down today, but we'll see. Tesla, unfortunately, right now, it just looks like a straight down. And BTC is continuing to indicate that bearishness. Okay, so what else? And then DJT... Somebody's like, he flip-flops hard. Yeah. No, that's called trading, you dummy. But that's all right. It's okay to be sad. So, all right. Let's see here. I still think SMCI has a big potential leg down. I don't have a position on these right now, but I've been trading them. And I want some shorts. I just don't know where we're gonna go with this up. This morning was good though. I had a 1020. Where is it? Hold on, let me show it here. It'll take a sec. Why is this sucker not working? I don't know. Like lately, these stupid things won't work as HDMI cables. But anyway, oh yeah, look at that. Coin's going negative now. Anyway, so watch that. The 118 level is a pretty big level here. But anyway, where was the person complaining about being flip-floppy? If you're gonna trade, you have to play the market. So I think that you're getting a little bit of a false recovery here on AI, and I'm ready to short it again. Now, I shorted it at the start of the trading day. I'm curious about Coin, because Coin's really selling off a little bit more than I think it should right now, because BTC is not moving that badly. But that's interesting. Yesterday, I didn't have as good of a day. Yesterday was a little ouchy-wouchy. But fortunately, this morning, we picked up 17K here on SMCI on a put, and I think it's going to get worse. So I'm probably gonna reopen on this, and I'm gonna keep sending all the alerts in the Stocks and Site group. I don't always win, but I think my hits have been probably in the neighborhood of 70 to 80% versus my misses. Sometimes the misses are painful though, but I mean that's always how it is. Now, am I talking about women or am I talking about misses and trades? Sorry, I'm sorry. I shouldn't say that. No. So everybody's got their own individual circumstances, but this is really interesting. The Qs gave up like half a percent here, so I think you get a little bit of a recovery here, and it's potentially right back down. Like I'm waiting. If I hit 1,000 again on SMCI, I'm shorting the crap out of this sucker again. But NVIDIA's bouncing, which is what you would need to get SMCI. To get SMCI back to 1,000, you need a bounce on NVIDIA, AMD, SML. But I think there's a chance there's a broader whole market AI crash that's ahead of us. And this earnings season could be it if those growth rates don't come in at expectation. But the problem, like, you know, I've been short on and off on ARM, and I've been right about the direction of ARM. The problem is you have to be careful. I've lost money on ARM puts just because of theta decay. So you have to be really careful how you trade. Usually, the way I like to trade is I like to just do day moves, in and out on the same day, because then you're not holding on to them for too long. Sometimes I'll hold until the next day, but sometimes that actually works really well. Like on Thursday I was, what was it? Thursday I was down. No, Wednesday. Pretty sure it was Wednesday. Wednesday at the close, I had these options that were down like 35K, and I'm like, crap. And I held them. We had a sell down. I'm pretty sure it was Thursday morning. It might have been Thursday to Friday. I can't remember exactly. And those only ended up down 10K from 35. So the next morning catalyst really helped, which I was betting on. And then that day, I went calls on Tesla and ended up an extra 20 on Tesla, which was great. So made up for the net 10K L on the other options. So usually I don't like to hold, but anyway, that was a good recovery. And so now I'm looking to play AI today. That's going to be my game today, especially with this bearish BTC move. So, but anyway, as I always say, every single alert I send to everybody in the Stocks Insight group. I try to give you my thesis as well. Like when we go into the course member live streams, I just break down, here's where I'm right, here's where I'm wrong, here's what's going on. Interesting seeing that a little bit of that recovery here in AMC. It's not very violent. It makes me wonder, is that a time to get on or not? Personally, with how bearish the Qs are moving right now, I think the answer is not. I think you're going to end the day pretty red on AI, but let AI recover a little bit first. So, interesting. Even Enphase can't keep it up. Interesting. But yeah, we are going to look at United Airlines in the Course Member Live. We're going to make a cup of coffee and jump over to the Course Member Live. But Tesla bleeding is pretty rough. Somebody saying, Kevin, a word on Palantir. You know, Palantir's been having a bleed out, man. It's been tough. Yeah, it just keeps bleeding. It has been tough, that one. Dang, look at that. Coin coming right back down. So coin now down about under that 218 level. That's a bearish level for coin. It's the entire market that's just not being very enthused. Anyway, so we'll watch. Somebody says big drop in Tesla. Let me see. Yeah, we've sort of been watching this 1.7 here. I don't know. I find this very entertaining. Hopefully you are entertained as well. I love it. You don't have to. But as far as actual market news, let's see here. We do have Nick T's talking about modern monetary theory. Bond sell-off due for a pause. Let me see. Yeah, this BTC drop. Coin is finally pricing in that BTC drop. And see, AMC can't keep it up. Yeah. So, anyway. What are bonds doing right now? Bonds at 4.64. You're only down 1.6 bips. Oil's actually down to 89 again. Gold's up at 24.10. Yeah, look at that BTC drop. Okay. All right. Well, we'll see what's happening. Send out alerts. I've got to go to the Course Member Live, and we'll talk to y'all soon. Let me go push this button here, and we'll watch this a little more. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. The third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Okay, Q's just went negative like 15 bips right here. Coin's now down 2%. It's crashing. Dude, that's a 4% movement in the day. Oh my God. All right, folks. We'll see y'all. I gotta go. Bye.